Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today, like the rest of the world, we're going to look at Greece. In particular, I thought we'd look at one stock traded globally on various exchanges, known as the National Bank of Greece. Sounds like a public bank, sounds like the central bank almost. Instead, it's a commercial bank, not unlike banks in any other country. And until 2007, 2008, it was quite a success story. Look at this. The shares were trading at about, in dollar terms, about $700 a share. So fabulous return for its many shareholders, some 30,000 employees, branches not just in Greece, but around the Balkans, and diversification in insurance and other businesses. So quite a good success story. The problem now, as you can see, as you get down here, you see that the stock is trading at $1.13 a share. So really, it's off the board. It's gone from $700 to $1, and with it have gone the lives, the dreams, the fortunes of many clients, many investors, many employees, and many managers, none of which is good. Can money be made in the current crisis? Maybe it can, although I think that investing in the National Bank of Greece, even at $1.13 a share, comes with a lot of risks. And what are they? The problem is the book equity of the National Bank of Greece is $2.3 billion. So for a big bank, that's not a lot of money. Half of that is in preferred stock issued in effect by the government of Greece for the National Bank of Greece. And they've got a loan portfolio that they fund in two ways. They fund by the good graces of the European Union, which is more and more reluctant to put what they believe is good money after bad into Greece. And the second side is that the quality of their assets, the loan portfolio in the National Bank of Greece, is always hurt by the continuing crisis in that country. It means that some 30–40% of the loan portfolio of the National Bank of Greece is always under pressure, undervalued, and eventually underwatered. So I'd love to stand here today and say, look, a way to make some money is to look at this stock at $1, $1.13 a share and say, gee, I could be patient and ride it back to $10, $12, $20 a share, which would, in a normal end of a crisis, would be possible. I don't think that is possible because I don't see how any shareholders can end up with money in the National Bank of Greece. I think the bank, like all the banks functioning in that market, will need to be recapitalized. And the only ones who will get some money out of the reorganization might be some of the senior bondholders, although even then, that's a long shot in my view. So as much as I would love not just listeners of this program, but others to support what Greece is trying to achieve and that to revive its economy and come back to the community of commercial nations, buying the shares of the National Bank of Greece probably isn't the way to do it. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.